Hello, this is Joe Turner, and this is the July 2011 Pring Turner Client Quarterly Newsletter. The title of our newsletter is "The Summer Fun is Just Beginning." Investor emotions ran very high through this past quarter as stocks experienced a very painful 8% drop over 7 consecutive weeks. This abrupt pullback set the stage for a sharp recovery into the quarter end, which basically left the major market indexes unchanged. We put out a June 17th interim update entitled "The Summer Rally Set to Begin," and we explained our expectation for a summer rally that would take the stock market, and more importantly, your portfolio, to new high benchmarks. The explosive upward thrust over the past few weeks adds encouragement to our optimistic view. We believe the summer fun is just beginning. So why do we remain optimistic when the economic headlines continue to disappoint? We realize the current U.S. recovery remains a tough grind, and most people say it feels like we're still in a recession. However, economic growth is robust when we look at emerging economies, and many of our favorite investments are strong beneficiaries of this underlying global strength. Your portfolio has significant exposure to natural resource, which are metals and energy, and industrial, things that include like machinery and technology sectors. These sectors cater to the global marketplace, and we believe they have quite promising profit potential despite the continued sluggish growth here at home. A dramatic push by Asian, Latin American, and other emerging economies toward industrialization have supercharged the demand for natural resources. Higher demand from dynamically growing markets is evident in much higher prices for energy, metals, and agricultural products. Our proprietary inflation barometer is a tool we developed to measure favorable and unfavorable conditions for industrial material prices. We use the CRB index, the Commodity Research Bureau Raw Industrial Price Index. It is worth noting that our barometer has remained in favorable position, which signals higher raw material prices, for 75% of the time since 2002, and is currently at a maximum favorable 100% reading today. This helps explain our long-term favorable opinion for natural resource and industrial themes, and why we continue to feature them in your portfolios. Natural resource stocks are also referred to as hard asset investments and can act as a store of value during inflationary times. Investors who emphasize hard asset companies protect themselves from a sinking currency and wealth erosion. Since 2002, the US dollar has lost about 35% value against its major trading currencies, and not coincidentally marks a time of significant strength and outperformance from your inflation-sensitive investments. Notwithstanding temporary corrections, which we will see from time to time, we believe this secular or very long-term uptrend in hard asset investments will continue for several more years, and your portfolio will benefit from a voracious global demand for resources. What's our market outlook? Bottom line, we are positive on the intermediate term, that is, the next 2 to 6 months outlook for the stock market. We do realize the cyclical equity bull market is quite mature. Pring Turner remains vigilant and is keeping a close watch on events and, more importantly, our market indicators, should they alert us to become more cautious. As the economic tides change, we will adjust your portfolio based upon our tried and true disciplines. This business cycle is progressing in a normal, rational, and sequential fashion. The bull market started in March of 2009, and as of July, we're over 2 years, but we still have a positive outlook for the intermediate term. We see more upside for the stock market. As always, we look forward to the challenges and the important job you have assigned us to protect and grow your valuable assets. Thank you for the opportunity and the responsibility you have given Pring Turner to manage and protect your wealth.